All right. Hello, traders. Mark P. Markets here. Hey, thanks for joining me for another Greenbridge Investing Market Analysis. All right, so we're going to basically update the weekly forecast that I streamed the other day. The idea here is to see if the charts can offer any clues as to the reward risk for the next few days. Okay, so I'm going to do my portion as quickly as possible, and then I want to answer all of your questions. So I'm not expecting a big crowd today, so I should be able to get more questions answered. So if you have a question about a stock or any type of market, if it's an altcoin, just please put USD or USDT after the symbol so I get the symbol right, and we'll go from there. All right, so with that said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, let's begin with Bitcoin. Again, real quick, a lot of people seem to be confused about this. We had a buy signal, what was it, yesterday? Or whatever, this inside bar right over here, and it has not followed through. People don't realize, everyone's so filled with hope and enthusiasm and blah, 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 that they don't realize that there are bearish signs staring them in the face right now. All right, this tail on this inside bar breakout, that's not what momentum follows through. That's not what it looks like, okay? Momentum follow through means we go vertical, or this thing should have pushed a few thousand points, but it has not. Not only has it not done that, but now we have this indecisive candle. So now it doesn't mean we won't get some little mini high or low somewhere between here and like the 30K low and then try to work higher. But at this point, this is not what I would want to see if I got long. All right, so that's a very important thing. Now, something to keep in mind, altcoins are going to be in the same situation, right? So yeah, some altcoins are showing some better signs than others, but it doesn't matter. They don't trade on their own. I still see a lot of confusion about that. People seem to think that these altcoins do their own thing, but for the most part they don't. And Bitcoin has proven this from this recent sell-off, the break of 50K, right? None of the altcoins did their own thing. They all followed, and they all gave back 50% off their highs, all of them, right? Which proves one thing, they're still followers. So if Bitcoin tests 30K, which again, we don't know if it will, but if it does, the altcoins will most likely do something similar. So as far as the reward risk is concerned over the next few days, I don't think the risk is attractive here. The reason why we stepped aside from this swing trade signal to begin with was the risk was too high. Okay, the risk is defined by the market, not a person. I don't sit here and say, well, I only want to risk $100. The market doesn't care what I want to risk. The market tells you what the risk is, and either you accept it or you say, no, that's too much. Okay, 8,000 points from this range right here is too much for our swing trade strategy. This is 8,000 points. I don't like that idea, okay? Because the thing is, in order to justify that risk, the market needs to push 8,000 points from where you buy it, which means you're looking at what, 47K or something like that, which it's possible, but it's a much lower probability because the bullish momentum, the short-term bullish momentum is not here right now, all right? Some people are arguing for a bear market. It's too early for that. I say we're range bound. We're in a wave 4, which means we need to adjust our expectations lower. All right, so I'm not looking for new highs anytime soon. I'm not looking for 60K anytime soon. We could be in this range. We could be in this consolidation for months, meaning we pop up into the middle of the range, which is like 50K. All right, so that means it may be a struggle to get there. I shouldn't have to sit through all that and take all that type of risk. All right, because I had to buy this thing at a bad price because I couldn't contain myself. Right, so we step away from this thing. There's nothing to do right now until the risk gets more attractive. Now, it doesn't mean it has to go to 30K for the risk to get more attractive, but I want to see a better setup than this, if anything. Okay, so that's one important thing to understand about this. The other thing is, again, when it comes to wave 4s, and I said this before, you're going to see a lot of false starts, a lot of false breakouts. You don't want to get lured into this, okay? the key to these is looking for that range bottom, that range low. Right now, that's defined at 30K. Okay, so the market may go there, the market may break it. We don't know, but that's what the risk is right now, and it's not acceptable for our swing trade strategy. Now, that is not to be confused with inventory, all right? Inventory or investing is a completely different game, and risk is defined by your size. So you can buy here any price. Price doesn't matter as much as size, all right? So I'm not going to repeat all that. I must repeat that like 100 times a day. Okay, so that's Bitcoin. So we may get a lower high here. We may test 30K again. All I can tell you is risk is not attractive for swing trades. So we step aside. We do nothing. Doing nothing is a trade, believe it or not. And a lot of times it saves you a lot of money. In fact, that is how you put a good performance together over time, is by staying out of potentially bad trades. But people that seek action because they can't, they have a small attention span, or they have no patience, but their friends are doing it, or everyone on Twitter is doing this and that and blah, blah, blah. You're just consuming the same junk as the herd, and you're behaving as the herd, okay? The herd mentality. You need to think opposite. You need to be a contrarian in order to understand this type of concept. And it's very hard to get that, especially when you believe in conventional wisdom, because that's how we all start out. We all believe conventional wisdom because it's natural, right? But it doesn't work very well in the markets. Markets are not linear. They're abstract. So they're a highly random environment. Conventional wisdom or logic will not help you in such an environment, even though people still insist. That's why, when you watch TV, right, like Bloomberg and all those, they have experts, and the experts talk about what? Fundamentals. They don't really talk a lot about technicals. They're never going to get into the type of price action detail that you'll find in, non-mainstream places, because they don't believe in that stuff. And on top of that, the channel doesn't care. They need ratings so they can justify ad revenue, right? That's their goal. Technical analysis does not draw big crowds, right? But good stories do. So if I sat here and I talked like all these fake gurus you have here on YouTube and other places, well, Bitcoin is there's a new thing coming out, and this new technology is going to make it amazing, and it's going to be at 60K by next Tuesday, right? That's what people want to hear, and that's what gets all the views. That's why they have 100,000 views, and I have like 100. Okay. Anyway, enough of that rant. So that's Bitcoin. I'm going to answer your questions. So thank you for your questions. Let me jump into the next thing here real quick, and that's the stock market. Now look at this. So we have these periods in the stock market. Funny, we have a guy in our chat room, one of our first followers ever, and he put something funny in there today. He said, 20 years ago, there was a saying, right? Sell in May. I'm sure you've all heard that saying. That's actually a very old market saying, and there's a lot of truth in that. And part of that comes from, way back in the day in New York, that's where all the hedge funds and all the large financial players were located. So when they went away, the market just pretty much, the volume shrunk and there was no activity, right? And that's where a lot of that came from. That's the traditional pattern. In recent years, we haven't seen that, right? But we may be getting into that type of thing again, especially now that, this stimulus thing that's been going on and on and on, how much longer is it going to go, right? So when that party is over, then we may see some more movement in the market. But in these situations, it's usually best to just stay out, okay? Just stay out and wait for opportunities. They're going to be even less frequent than they normally are in a good environment. Now, here's the thing with the NASDAQ, all right? This is NASDAQ 100. I talked about this yesterday in the chat room. I said, if you want to step into the SQQQ position, SQQQ is a reverse ETF. This is the SQQQ. Okay, you could trade it like a stock. I have an options position on it. I've had it for a while. I would not recommend the options. The time value is ridiculous. The decay is ridiculous, and it's just too much. It's too much work for this thing to get anywhere, right? So you're better off with the outright stock position. You would have, if you buy this thing, the SQQQ, you're betting on the short side of the NASDAQ, okay? You're basically taking a short position, but you're long, if that makes sense. If you find that confusing, don't do it. Okay, now, So here's the thing. I said yesterday, if you want to step into the SQQQ, there was no sell signal in place. Now we're starting to get one. Look at today's price action, right? Well, the key thing that people need to keep in mind here is this. This is a resistance area. So I don't care how optimistic. I hear all these optimistic things. Oh, well, you know, Nvidia is going to come out and this and that, and this company is doing. I don't care what they're doing. If you're at a resistance, if the NASDAQ is at a resistance, it's a low probability area to be buying stocks. Okay, that's all I'm interested in. Is it a good location for stocks, or is it a bad location for buying stocks? This is not a good location for buying stocks. The risk is very high. So what goes on in these situations, right? Look at Square. Something like Square, okay, gets people's attention, lures people in. Like, oh yeah, Square is going higher, and I read some news on it, and yeah, they're doing pretty well. Blah blah blah. Yeah, okay, my Robinhood account. Okay, nice. Now you're buying into a potential lower high. And I didn't like these things at, you know, much higher prices. I especially don't like lower highs. Take a look at something like Amazon, the leader, okay? This is not good. This is a leader. This is a FANG leader. This is a double top lower high, okay? That's bearish. So that thing looks like it's trying to pull back. Google, another leader, double top, potential double top. These are not low risk places to be buying stocks. Look at Facebook. Oh, Facebook. I love Facebook. New highs today. I'm so happy. Right. Double top. Double top. I don't care if it made an all-time high. It's not the high that gets me excited. It's the risk. Okay? The risk. This is high risk. If I bought this here, the question is, where do I get out if I'm wrong? Now, if you're nimble, right, and you know what you're doing, you could say, well, I'll get out at the candle low. Okay, fine. No problem. At least you know your risk. But most people don't do that. They say, well, I'll just hope it goes higher because it's Facebook. Right, well, your risk is actually defined by here, 298. Okay, right now this thing is at 330. Do you feel like taking 30 points of risk? I certainly don't. And the probability of this thing going higher is low. These are things, these are ideas that you cannot see. That's why people get lured into this stuff, because they're getting sucked into good stories. Okay, forget the good stories. That's just there to get your attention. Focus on the price. The price doesn't tell those type of stories. The price gives you reality. No one wants reality. I know. I understand. Okay, so that's the FANG stocks. That's my argument with the NASDAQ. If you're interested in the NASDAQ and you understand the SQQQ, it's not a bad idea for an aggressive short. Now, here's another thing I have to say about this. I know I'm ranting, and I know I shouldn't be talking this long about this, but I have to say this. The thing with the SQQQ, or the NASDAQ in general, is we are fighting by being short, all right, which is the side that I believe more in on the NASDAQ. We're fighting a stimulus market, all right? Constant stimulus, constant government stimulus, and all that nonsense. We're fighting that. That's why the market refuses to sell off. When that party is over, like I said before, you know, we'll probably start breaking supports, but we're fighting it, which means if you get short something like this, okay, buying SQQQ at like, you know, 11.50 or 11 quarter, something like that, and it goes to like 10, which means this thing will probably be pushing 14,000, you have to take the loss, okay? You have to take the loss quickly because this thing may continue to push to 14,000. That's what inflation does to markets. Now, speaking of inflation, let's just take a look at the bond market real quick. Before I get into the next thing, I want to talk about gold. But look at the bond market, right? This is the bond, these are the 10-year note futures. Now, here's the thing about this. Is another thing people don't look at or don't understand. This is a very slow mover, by the way. So this trend, as you can see, is generally bearish, right? Generally. Recent price action is more bullish. You have a higher low situation here, and you have this attempt at the high. Now, the way bonds work, right? What's important about bonds are the yields, because that's a reflection of interest rates. So bond prices go higher, yields go lower, right? But if bond prices go lower, yields go higher, and that's interest rates. The market, nothing wants to hear that interest rates are going higher, all right? Now, we have this little tick today, right? This little bearish price action. This could be a lower high. Now, this, again, can take weeks to play out, but if the bonds, keep an eye on this. If the bonds take out these supports, like what is that? I can't even read that number. 13, No, 132.06. So basically 132, you start taking that out, or you start taking out the April low. I mean, look at this thing from April till now. That's the move that it's had, which can be a lower high. If this thing goes back into that bearish trend, that means rising interest rates is what that means, which is not going to be good for the stock market, okay, or gold or anything else. So just something to keep in mind. All right, again, the Fed can come out with a surprise rate hike, or they can change their tune at any time. We can't sit here and think that, the Fed is being honest with us, or any kind of public information is being honest with us, right? Well, the Fed has no vested interest in, our financial situation. They have their job to do, and they're going to keep their inside information close to themselves. And if they're sharing public information, you have to be very wary of it, which means if they're planning to raise interest rates, they're not going to tell anyone right now. All right, so just mentioning that. And there have been a couple of hints which they had to take back. Anyway, not going to try to outsmart the Fed. So here's the thing. Let's talk about gold real quick, right? Gold. And gold right now is showing, right? Beautiful move in gold. We've been long since, what, March 30th. We know about this trade. And this swing trade, by the way, went to all three targets. So we're out of this gold position, which is nice. And look at this. It gave us this bearish situation yesterday, right? But we don't react to stuff like that. Anyway, we're out, so it doesn't matter. But I'm looking for a new opportunity to get into gold, right? For another swing trade, because gold is clearly strong now. Gold may go to 2,000 in this move, especially if we do have inflationary type of stuff going on. This current candle pattern is bullish, okay? The little inside bar, when a market tries to pull back and it can't, and it produces an inside bar, that's usually a continuation pattern. So this thing may be setting up for another leg higher next week. That would be a very aggressive trade in gold. I'd be open to it because gold has a lot going for it right now. All right, so anyway, that's what I want to say about that. So if you're in gold, right, we have the gold mining stocks, look, Wheaton Precious Metals, we've been in this. I told people to buy this back in February. You have NEM, things like that, consolidating a bit. There's really no reason to rush out of these, okay? Also, silver, AG, is a silver stock I called. You had 2 weeks to get into this thing. I mean, this thing is doing okay, right? It's at 17.5 basically. Nice pin bar today. There's nothing to do here. Just let these things ride. No reason to react. All right, also, I'm just going to throw this in there before I get into your questions. Look at GameStop. This was trade of the week, okay? 2 weeks ago, I called this one trade of the week, and it actually offered a better buy price than this. This thing went to target 2 today. Look at today's high, 250.5. Today's high. Nice, right? GameStop. The trades of the week don't always work out like this, but this was a nice consolidation breakout. We saw this a mile away. The point is, it took over a week for this trade to get going, okay? Over a week. Now, all the day traders and everyone, they all get excited and they react on this candle here. We were in it, all right? The trade was active at that point, and as it pushes higher and gets, everyone all excited, we're getting out. That's what you do with these things. Anyway, I just wanted to mention that. That was trade of the week. You can get that by just signing up as a free member to Greenbridge. We send out that email every week. Okay, yesterday's was CGC. And CGC, look at CGC, right? Tried to get a party started today. Look at this thing. It's up, what is it, 35 cents today? You could see the trade idea right there, right? 24.25. This thing is at 24.69, so it's slightly green. So we'll see if this thing could work its way higher. This could be the beginning of a new cannabis leg, right? CGC happens to be the leader of the sector. So if this thing starts to go, we may have an early start on that. So that's nice to see. And it was at a great level, and there was a bunch of things that lined up there. All right, so those are the things I wanted to talk about real quick. Let me get to your questions because I talk too much. All right, 20 minutes I've been talking, and I just covered my stuff. All right, so let me see what you guys have. Hey, good to see you. All right, cool. Hey, we got Dan from Romania. All right, Schwartz, hey, good to see you. Wedge, hey, nice to see you. All right, thanks for joining me today. BTC USD analyzed. Do you still think it's going to test 45K? All right, so I pretty much answered that question. Let me just go back there. Yeah, so I think 50K is reasonable. 50K is old support, new potential resistance, especially in a wave 4. I think it's within reason. Okay, so if I take any swing trades, that's, I'm going to be using that as my, to help form expectations. Okay, Stel, could you comment in the long term, mixing position trading with day trade accumulation techniques should mix? It's the first thing, okay? Should not mix day trade with accumulation and long term. Should not do it. Here's why. You're mixing two magnitudes of risk, okay? Long term is very, very broad, very big magnitude risk, and day trade is very small magnitude risk. You need to keep them separate. That's the first thing. Second thing, so if you're going to play the accumulation game, which is the inventory game, I talk about it all the time, right? There's nothing wrong with dollar cost averaging, but you have to do it carefully. And the way you control your risk is with your size. That's the first thing. The second thing is you have to do it in instruments that are really worthwhile instruments, okay? Half of these garbage altcoins are garbage for a reason. All you're doing is making the developers rich. They're not very good choices for dollar cost averaging. Now, if you're a big believer, here, let me pull up Link, because Link, look, there's a lot of hype in these things, as you know. Look at this, right? So this gets everyone all excited, and they start to think, oh, Link is going to do its own thing, and Link is going to be the next Bitcoin. And I followed some YouTube guru who told me that Link is going to make me a millionaire. I'm going to buy more Link. Anyway, my point is, you get this kind of stuff, right? And meanwhile, it's not going to go very far, like I was saying before. It's not going to go very far if Bitcoin can't, right? This is all it's doing is luring people in to just basically push them out again, all right? So you don't want to get caught on this. The risk is very high. So my point is this. If you're going to dollar cost average, don't do it in these junk coins. Now, if you know the developers and you're like personal friends with them and they're telling you, this is what we're going to do, but don't tell anyone, it's inside information, then you have an advantage over everyone else, and then you can make quality decisions. But if you're like everyone else and you just have to go on outside information like most of us, then you have to focus on the risk, okay? So either you get in with the developers and they give you inside information. I'm not talking about going to their chat community and they say, oh, but they said this in their chat community. Again, you need to know them personally, and they need to tell you, this is what we're doing. Don't tell anyone, okay? And if you get that, okay, great. If you don't have that, then you're at risk like everyone else. So my point is this. If you're going to dollar cost average, do it with high quality instruments, okay? This is not a high quality instrument. This is highly speculative. I know people have like this makes up like 100% of their portfolio. Oh, I have Link. Oh, I have Uni. Oh, I have, DOT. Great. That's a highly speculative portfolio. Where's Microsoft? Where's Walmart? Where's Intel? Where's ExxonMobil? Right? Like, you want high quality instruments to dollar cost average. So in this space, in the Bitcoin space, the highest quality really that you can argue about is Bitcoin, because it's the leader, and pretty much where it goes, everyone else follows. So if you're going to dollar cost average or build inventory, you're better off doing it in a high quality, top tier coin like Bitcoin, perhaps Ethereum or something like that. But everything else, unless you're close to the project and really believe in their goals and in their philosophy, I would not be highly invested or dollar cost average into them. Now, another thing I want to say is, we watched a lot of people make a lot of money from a year ago, right? They took some risks when these coins were less than a penny, and they made all kinds of money. So people think that that's normal, but that's not normal. In order to make a lot of money in these markets, if you want that type of lottery ticket thing, the idea is to take small risk. So if you bought, $1,000 worth of theta, when it was less than a penny or whatever, and it went to $15, that's a home run. Your $1,000 turned into, $20,000 or whatever. That's a great trade. But people aren't satisfied with that. All right, I should have invested $50,000 and I would have been a millionaire right now. Right, but if you can't afford to risk $50,000, meaning it's okay if it vanishes, then you should not be taking that kind of risk, right? That's how rich people make money. They take small risks. They know that most of the time, a lot of those risks will go nowhere. They will lose, but the risk was small, okay? But then one of them will have a huge return and make up for all of those ones that didn't work out, right? That's when you're dealing with high risk instruments. Anyway, okay, so I just wanted to mention that. A lot of people don't realize that. All right, I hope that answers your question about mixing. Keep day trade type stuff to day trade type risk. Keep inventory separate. All right, So, well, that was a long rant. All right, let me see what else I got here. Thanks for the question. All right, Schwartz. Should I stay in ETH, BTC, or better sell everything at a 25% loss? Well, look, I can't answer that question for you really. You said BTC, are you in the cross pair? ETH against BTC, or are you just talking about you're in both coins? Let me see. I'm going to guess that you're in both coins. Well, here's the thing. If you're at a 25% loss, I mean, at this point, you're selling near a low. Okay, now it can go lower. You have to decide if that risk is acceptable to you. One thing you can consider is maybe lightening up. Instead of selling everything, you hold on, you take a small, you reduce your exposure so your risk is smaller. And if the market does find stability, hey, at least you're still in some of it, right? That's one thing to consider. But now you're managing a loss and you're at the mercy of the market. So you have to decide. Now the risks that you face when you say, okay, well, I'm going to hope for the best. Well, you risk facing a test of 30K, right? And there's no way to know if we're going to test it, right? We may test it, we may break it. So if we break 30K, we're looking at like 26K, and we're looking at possibly 20K. It's hard to believe that we can get to those prices, but hey, no one thought we'd be at 30K in like a week. So I'm not saying we're going to go there, and I don't want you to react to what I'm saying. I'm just saying those are the risks that you face. If you don't like those risks, 20K, I can't handle that, then you should probably lighten your exposure. Okay, that's the best thing to do. Reduce your risk, but just keep in mind you're near a low. So be prepared to get back in if stability proves itself. In a wave 4, we probably will test lows again, right? And then what you want to do is you want to get out of stuff when you get back into the middle of the range. The middle of the range is the best place to be reducing risk, and that's around 50K. All right, that's a time to really, like, the stuff that you got at bad prices, at least you're not selling it at the bottom. So just something to keep in mind. We're at a potential bottom here, but we don't know for sure. Now, Schwartz, oh, by the way, 3 days ago after Matic grew 100% a day, it was the biggest gainer, way over BTC. Okay, well, so Matic, right? So we talked about Matic. People had asked about this. Here, let me get the chart back up here. We talked about this the other day. And now look, so Matic, this is just hype. Okay, so how is that possible? Well, you have people hyping these things. If you go on YouTube, right, you can find all kinds of videos about, this is going to do this and you're going to be a millionaire and blah, blah, blah. And a lot of people follow those videos. Plus they have their own communities that they push this stuff to, right? So they just basically stimulate the herd mentality and everyone gets excited about it. And that's why you have an outperformance of Bitcoin. Matic and MKR were actually relatively strong to Bitcoin. They were actually, there was some strength there relative to what Bitcoin is doing, but too risky, right? I'm not going to take something like that. So can't explain why, but most likely it's hype, right? And all we can say is if Bitcoin breaks, this thing is probably not going to go much further. Maybe it holds its supports better, but that's the best you could do. Again, it's about the risk. How much risk can you take? If you buy Matic right now at $2, $2.02, all right, the risk right now is defined by this low over here, which is 74 cents. Can you take that kind of risk? Yeah, sure. If you buy like one coin, yeah, okay, no problem. You buy 10 coins, but people want to throw in like, $10,000. Well, that's a big loss. That's a big percentage loss, on $10,000, or usually amounts of money that people can't afford. So people want to make money, but they take huge risks. Like I said, you can't, if you don't have a lot of money, right? If you have, like, what's not a lot of money? If you only have like a couple of $1,000 or less than $5,000 to invest, don't expect to make double or triple that or quadruple that, in a month or something, because the environment's going to go back to normal, right? Normal is what we had before February, and before January, right? Before December. Normal was what we had more of like a year ago. That's more like normal, where things don't really go anywhere. So, you can't go into this with over-exaggerated expectations, especially if we're in a wave 4. All right, so everyone still is enthusiastic, and there's going to be a lot of hype out there to try to keep that going, unless Bitcoin breaks everyone's hopes by, taking out 30K or taking out 25K. So again, it's all about risk. All right, so good questions. All right, cool. Hey, no problem. All right, so Jesse. Hey, it's Jesse from Poughkeepsie. The only New Yorker I have, upstate New York, not even from the city. That's okay. Jesse, I figured out, I said it yesterday in the other day on the show. I figured out why no one watches me from New York. It's because they're all too busy watching Kramer. And even though I'm bald and I'm angry too, Kramer is just, I guess, has more, I don't know, he's just more popular. Okay, anyway, so FNKO, Funko, this is interesting. So hey, that's a nice looking chart, right? Clearly, higher lows and higher highs all over the place, right? Strong, can't argue with it. Now, here's the situation. We are at a resistance, right? Trying to break out. So here's the thing. I don't like these type of trades. This is a breakout. Doesn't mean it won't work. How much higher can this thing go? This thing is at 26.39, and it looks like it's going to try to go for the high of 27.04. So there's two things you need to ask of this thing, right? What is the risk, and how much higher can it go? Does this thing have any historical? Okay, so look, there's some history, right? Going back over a year. There's some history here. Look at this from back here. There's a high. What is that high? Around. So it's around this area, right? Just around those 27s. So you have that, right? You're dealing with that, which means, and you have another going back even further. You know, how high is that? Let's see, a year even further than that. This is back in 18. What is that? $30? Yeah, it's around $30, right? All right, so we know that we're at a historical resistance here. So, you know, some people say, well, why are you looking so far back? I thought that, you know, history doesn't repeat itself that way. I'm not looking for, I'm looking for the level, because levels have a memory, right? There's often a lot of traders that are stuck, or investors that bought at that level and are very happy to get out for break even. That's just human nature, right? You say, why would they get out? This thing is strong. Well, because they had to take all that pain. So now when you have your money back, you're like, F this thing, I'm getting out, right? So you have that potential up in here. So that's a big risk that you're taking by buying this thing now, right? As far as probability goes. Now, as far as numerical risk, 24.38. So 24.25 is where you'd have to get out if you're wrong. So, you know, you're looking at about $2 worth of risk if you buy it right now. But the chances are it takes that thing out. All right, it takes out that low. So I wouldn't touch this thing here. Someone had asked an interesting question that I couldn't answer the other day, you know, because I was overwhelmed with questions. But someone had asked, if there's a buy signal, and doesn't that outweigh the probability, or doesn't that mean that the probability is better, that it's going to go higher? No. Probability, the signal is just basically a set of rules that helps you get, that is more likely to help you get on the right side of where the market is moving. It really doesn't have much to do with probability, right? The probability comes from your context and the stuff going on around you. Very similar to a poker situation, right? You have two aces in your hand. That's a pretty high probability starting hand, but it changes. You can't just say, well, I got a high probability hand, I'm just going to do this. Things change, right? As the cards come out on the board, where people are sitting, how much of a stack of chips you have. You know, are you the short stack? Are you the big stack? You know, how many other people are in the hand with you? How are they betting? All those things come into play after the flop, right? Or even before the flop. So it's the same with this type of stuff. That's how you have to gauge the probability. So my point is, this is a low probability situation. You're buying into the high and all that stuff. So I hope I made that clear. So what do you do here? If you buy the breakout and it fails right away, you should be quick to get out, right? If you want to take that chance. But for me, like, it's just not a chance worth taking. You know, you get a red candle like right away, like kind of like this green pin bar over here. You get something like that, I'd get out right away and take the small loss. Otherwise, you're looking at that 24.5. And if you get the pullback, then your support after that is around 21. That's probably a much better place. 21, 22, much better place to look for a long. But great chart for the radar for sure. Thanks for asking about this one, Funko. All right, let me see what else we got here. All right, Andre, please take a look at Nicola. I'm wondering if it's up to a squeeze. 30%. Okay, interesting. So it's a high short candidate, right? Oh, look at this. That's interesting. Right? Nice bun, nice push on this thing. This thing was garbage for the longest time. Well, yeah, you may be getting that run. Let me see something here. Here's LI. LI is another one. See, LI had some news recently. These things are starting to pick up steam. How about FUV? All right, it's trying a bit. How about NEO? We had trades in these things, and a lot of them stopped out. NEO, so they're starting to go. But here's the thing. So let's go back to Nicola. buying this thing now, no good, right? Because now you're reacting to the high of the candle. I wouldn't touch it now. The place to take the chance was really the higher low. In fact, I had that highlighted. I've talked about it, but I gave up on Nikola after a while because it was just so out of play. The change occurred actually when it took out this lower high at 1290, right? So can't touch it now. This is a good one for the radar. It took out another high over here at 1414. So the best thing to do is wait for the next pullback. Okay, and you know what? If it never pulls back, then who cares? You find another opportunity somewhere else. But what this thing should not do is go back below 12 and a quarter. That's really how it should behave. If it's strong, it should not take out that support. So if it can pull back and stay above 12 and a quarter, that's probably where the next opportunity will be. This thing's at 1510 right now. So I don't expect these things will go crazy. They just, they suck people in, and then you see them pull back again. So I would wait for the pullback. But thank you for bringing this one to our attention again. I definitely want to keep an eye on that because I like these things. I like the EV side, especially when they get crazy. How's Workhorse doing? All right, we used to have trades in all of these things. Workhorse, and it's not as exciting there. What was the other one? There was was it the Blink, right? The charging one, BLNK, Blink. Yeah, they're all starting to perk up a bit. So we had trades in these. Many of these, like I said, stopped out. Right now they're starting to perk up again. So definitely good for the radar, but I wouldn't chase them. So thanks for asking about that. Great question. Okay, so let me see. And it's interesting too that they have a high short float. That's also a good thing because when they squeeze, they squeeze. So please take a look at BP. Bullish on daily. Looks like neckline. Okay, let's take a look. BP. Is that energy? Is this British Petroleum? So let's see here. Yeah, look, general trend, I see higher lows, higher highs, right? That's all good. If I believe I have the right symbol here. But you have this situation right here. Let me just check the chart and make sure. All right, so you have this potential little mini triple top. I wouldn't go nuts with that. Like I wouldn't say, oh, it's a short. I wouldn't say that. But the thing is, see, you're saying here, bullish on daily, looks like, okay, inverted head and shoulders. I don't see the I see a regular one here. I mean, I guess maybe if you're talking about all of this price action back here as part of like the shoulder, the head in this area here, the shoulder. I don't know. I don't like the general location, right? Here's the thing. Where's the support? Where's the resistance? Your next support on this thing is at 25.5, right in that area there. It's trying to fool around there. We're at 26.25 right now. How fast does this thing move? Let's see, 24 and a quarter. It took about, what, 2 weeks for this thing. So it took like 2.5 weeks for it to move $3. So it's not like a fast mover. I guess unless you have this type of news in here, whatever was going on in here, that looks much faster. But recently it's been a little slower. So I would wait for better prices, although this thing is generally strong. You are fighting this little problematic area here, which could just be a consolidation. But that's why I would just hold off on this to see if you can get better prices. Unless you're willing to take the risk. I mean, I know you know what you're doing, but your risk is defined by two areas. You have 25.5, and then the other one is 24 and a quarter, right? Has no business taking out those supports if it's going to maintain this broader structure. All right, so thanks for asking about that one. I mean, energy has been strong recently, energy and banks. That's what's been holding the S&P up. And if these things give up, I think we get our S&P pull back. All right, but again, these things are sensitive to what? Inflation, cheaper dollar. That's one of the reasons why I think energy is so strong. But that's just an opinion. So, hey, greetings from Italy. Nice. Buongiorno. XMR. Reduce it or hold it, he asks. Okay, let's take a look. XMR. Monero. Oh, this thing got hammered. So it looks very similar to Bitcoin here. Let me erase some of this stuff here. So reduce it or hold it. Well, here's the thing. So you're not at a high, right? You're near a low. But one lesson that I want everyone to take away from this is, when the market looks like this up here. In fact, let me get rid of the red stuff, right? When the market looks like this, right? When it looks like that, and you go around YouTube and everywhere you look, everyone's bullish, 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 bullish. And what am I saying? Take money off the table, take money off the table, take your money off the table, take it off the table, right? Because this is what's coming. I don't know when that's coming, but that's what's next. Most likely. No one wants to believe me, but that's what you're facing, right? Okay. So now you're in the situation, you're nearer a low, you're not at a high. So as far as, should you reduce, you're in the same situation as the other one we looked at, right? That Bitcoin situation. Now look at Bitcoin as the leader. If Bitcoin takes out 30K, which is a risk, you're looking at a break of 175. The question is, can you handle that risk? All right, only you can answer that. If you can handle that, then, you have to, then you can give it a chance because it can break. If it breaks, this thing is going to coincide with Bitcoin. The next support on XMR, let me just make sure I have, XMR. The next support is this area here, which is what, 122. That's quite a ways from here, right? And it's possible we get there. By the way, if I count waves on this structure right here, right? If I count waves, and Bitcoin's very similar. This is basically, this looks like a little mini wave 4 on Bitcoin. If that's true, then, we still have one more leg lower, if that's true. Now, again, these things are not, you can't think in absolutes when it comes to Elliott wave, but it's a possibility. So if we get that break of 30K on Bitcoin, these supports are likely to break. If you can't handle that type of risk, then it would make more sense to reduce risk now, even if for a loss, okay? Because you're preventing that. Now, I could be wrong, and these things may work their way higher, but you can't be upset about that either, right? It's about risk. If you took too much risk to begin with, that's where your original mistake was, and now you're trying to correct for that. What you do from here is going to be, there's not going to be any real right answer. It's just about, can you handle the risk? All right. And like some people can't. So it would be wiser to distribute or reduce the risk. And if the market stabilizes and starts to show better signs, then hey, you can always get back in. All right. So you have a choice. Get rid of it all, get rid of some of it, or hold on to it and hope for the best. So it just depends on how much you can handle. All right. So thanks for asking about that. Like I said, this is a Bitcoin follower. So one thing that may make sense is you reduce your risk, right? Get out of, let's just say, I'm just going to throw a random number out there. Let's just say you get out of 30% of it, right? And then it pulls back to the low. You could buy that 30% back. At least you're getting in at a better price. Then maybe it breaks, okay? And then you buy some more, right? If you're looking to average into it, because now you're not averaging at highs, you're averaging in at lows. But like I said before, when it comes to averaging, for one, the most important thing is you have to manage your risk with size. The first step on that is having a specific allocation or a goal. So if it's $10,000 that was your intention to invest, you're now working with that $10,000 and no more than $10,000. The reason why that's so important is, what if these things really get hammered? And what if this thing goes back to some ridiculously low number? What if Bitcoin goes to 10,000? We don't know. What if it does, right? If you have a specific allocation planned, like, okay, no more than $10,000, and you're fully invested by the time Bitcoin reaches 20,000, and you're fully in, and your 10,000 is now worth like 5 or 6, and it goes to 10,000, well, your 10,000 is now reduced to like, maybe 2,000 or 3,000, but at least you don't keep putting more and more and more money into something that's just, not working. You know what I mean? You have to protect yourself. That's the only way to do that. And then when it starts to show stability at some point, then you can start putting more, start reallocating again, or if you want to put fresh money in and increase that specific allotment of 10,000, then at that point, you wait for stability. You don't just do it, randomly once you meet your allocation. I did that with like wheat and precious metals, for example. Let me give you an example here. Okay, hold on. WPM. So on like wheat and precious metals, I was buying into this thing from between $40, right? And basically these lows, right? I was just buying a little bit more, a little bit more, a little bit more, but I had a target allocation in mind. Once, and I was all in. So if Wheaton went lower, because if gold broke and went a lot lower than 1675 or whatever, well, I was all in. So it wasn't going to shake me out because I wasn't going to keep putting more and more money into it, right? Now it's doing well. So that's how you have to protect yourself. Otherwise, you'll get emotional and you'll bang out at the wrong price. All right. So anyway, I know those are very, very long answers, but thank you for asking a question. Okay, let me see what else I have here. NTL. I've been, wow, 3+ years. Thank you on TradingView. This is my first live. Learn a lot. Oh, cool, cool. Thanks for sharing. Mexico City. Ah, mucho gusto. Okay, let's see. I call a comment on NASDAQ and SQQQ. You saying going long with an assumed idea of NASDAQ is, okay, I'm confused here. Let me just see. Let me read that question again. With an assumed idea of NASDAQ. Right, so buying the SQQQ, if you buy it, you're expecting, it's basically a short position, right? SQQQ is a triple leverage or whatever leveraged ETF, ultra short, meaning you buy it, you're expecting the NASDAQ to go lower, but you're long this instrument, right? So, yeah, so the idea is you buy the ETF outright, you buy some shares, and but put a stop around 10ish, right? Because the thing is, look at the lows here, 1069, right? If the NASDAQ goes to 14,000, which I think it's a low probability, but in this stimulus environment, it can happen, then you're protected, right? You take your loss, and it's not a huge loss. What are we looking at here? $1.15, $1.20. It's not horrible, right? Meanwhile, you have a lot of potential reward. If this thing can easily run to 13 or 14. So you're risking about $1, $1.20, maybe $1.50 to try to go for $2 or $3. The reward risk makes sense. So that's how, I think it's a much easier way to play the short side of the NASDAQ, because the NASDAQ is a pain. Okay, look at this thing. I mean, it's trying to act short today. It's trying to act a little weak now, but this thing sucks. Okay, I mean, these moves here, it's just complete nonsense. This stuff, right? This is the result. All this, I'm trying to draw a box on it. All this from this pin bar low, all this nonsense right here is just nonsense. It's just stimulation nonsense. That's what it is. Straight to the resistance. Squeezes all the early shorts out. So, and it may go a little higher. So that's what you have to be careful of with those things. So it's aggressive, but I lean on the short side of that thing. And I have SQQQ. I'm in that position, but I have the options. I have January options. And I would not recommend the options. Okay, you better, that's why I'm telling people, if you're going to do it, do the shares outright. At least you don't have to deal with the theta decay nonsense. All right, could you please take a look at gold, Barrick? Okay, sold on recent highs. All right, so gold, Barrick Gold, which is the mining company. Right, let's take a look at that. Anna asks, and so sold on highs, pulling back a bit. Okay, that's nice. Look at that. This could turn into a buying opportunity. Now, no, it's still too early, right? There's no buy signal here yet. The first thing you want to ask is, where are the supports? Well, you have a support coming up in this area right around here. That's around 23.5. This thing right now is at 23.85. It's not too far away from there. All right, so that's one inflection point area to consider. The other area is 22.5. Now, the price action is important here, right? People like to step in front of the level because they think it's that simple, but it's not. It can clear the level randomly. So you don't want to step in front of that. There's no buy signal. There's no reason to buy this thing right now. Am I bullish on gold? Absolutely. But this may have some more bearish momentum in it temporarily. So I would wait for stability, right? It'd be nice to see an inside bar develop here, perhaps a bullish pin bar develop at this price point, and that would be your re-entry. That would be your long on that, Anna. And that might be a good swing trade for us to call too. I've been looking for another swing trade in gold. It's just, gold hasn't given the signal yet. But okay, that's what I'd say about this one, Barrick Gold. And here's one thing: I don't trade on fundamentals, as you all know, but gold has fundamentals going for it right now. It's a seasonal thing. So over the next few months, gold should generally be strong. That's why when I see bearish candles or I see something bearish developing, I'm not really worried about it, because buyers are likely to step in just for those fundamental reasons. Once that seasonality runs out, that's when you have to watch out. All right, and that's usually the other, from like December to like May or April. That's when gold is usually not seasonably favored. All right, so hey, no problem, Anna. I think Anna, you got some of that GameStop, didn't you? That was a nice trade. All right, what confirmation would you be looking for in order to confirm follow-through? So Alex, let's talk about follow-through, and let's talk about, let's talk about Bitcoin, because Bitcoin is the one that I was basically saying that there's no follow-through. So when you have the signal to go long, right, and in this case, that was this inside bar right here, right? That was actually a long signal when it took out the high. We weren't even interested in this, right? For one, because the context is just so against this thing right now. But the point is, there was a buy signal. And we mentioned, hey, for very aggressive traders, if you want to get involved, we don't even send out a text for it. We'll mention it in the chat room and we'll say, hey, if you want to get involved, but you're on your own, we're not taking this. And we're very clear about that, right? But Andrew may have mentioned that. I wasn't even going to bother because I just don't like this thing at all. The point is, your question is, well, what do you want to see for follow through? When you get a buy signal, the next candle should look like this. Okay, it should close strong. It should be vertical. It should be strong. And you'd be like, wow, that's a nice candle. Okay, here, let me give you a nice example of what follow through looks like. GameStop. So the buy, it was a different type of setup, but the buy price on GameStop was 189, right? Sent it out 2 weeks ago, like I mentioned earlier. So that was over here in this breakout. Look how it closed. Okay, look how it closed. People had 2 weeks to get into that, by the way. And it just basically, all this action just occurred this week. But when it breaks the number, right, look at this, what's this high in this candle here? 188 was this little previous candle back here. And then look, it went through 189 and just never looked back. It closed strong. That's follow through. Nice, that's what I want to see. Now, if it took out 189 and then you get like a pin bar develop over here, that's not what you want to see, right? Like Bitcoin is showing us. So now, I mean, look where this thing is now. This thing is 263. Wow, nice. Where's the third target on this thing? 280. Can we get there? Maybe. I mean, it's possible. GameStop. With the herd, the way the herd reacts on this thing, all the day traders out there jumping into this thing, we're getting out. Okay, anyway. So thanks for that question. Let me see. Zelta, greetings from Latvia. Which platform do you use for stock trading? Okay, that's a good question. So I use, for anything that's not Bitcoin stuff, I use Interactive Brokers. I've had an account with them for a very, very long time. Okay, so Interactive Brokers, they're not easy to get an account with nowadays, but they have offices all over the world, all that stuff. They have very competitive commissions, and they've always been pretty good. Okay, I've never had any complaints about them. Another one to consider is TD Ameritrade. I'm not a big fan of their platform because I think it's got too much nonsense going on in it. A lot of bells and whistles that stimulate you to trade. I don't like that. At least Interactive Brokers, you can customize. They have their bells and whistles too, but you can customize things and keep things nice and clean the way I like it. But I would say those two are probably decent. Also, I make fun of Robinhood a lot, but Robinhood, if you're looking for accessibility and ease of trade, I mean, you can use Robinhood as a platform, but just only for order entry, right? Don't use it for anything else. Don't think you're going to get quality research out of Robinhood. That's for the herd. But, again, it's really when you need a stock platform, not for the information that they give you. You just need it to get in and out of the market. You just need a way to place orders easily, find your information easily, like, placing your stops, placing your limits, being able to view your portfolio, being able to review your average prices and all that other stuff. You need that information, right? So you can manage your risk and manage your positions. You got these platforms, like I'm going to pick on Binance here for a second. That platform's ridiculous, okay? They made that thing like a slot machine, and he's trying to sit there like, well, where did I get into this from? Where's my average price? I don't know who put that thing together, but that thing is for gambling, all right? And that platform is no wonder why people are so nuts. So you see all that information, most of that, I'd say 99% of the information on that platform, besides your trade information, is useless. Doesn't help you at all. The only thing on there is like a chart, okay, if you know how to read the chart. But everything else, all the stuff going on around you, complete useless. But they do that to stimulate you, just like a slot machine. All right, anyway, enough of my platform politics. So that's, but that's my question. That's my answer about stock, stock platforms. And they don't, Interactive Brokers, obviously, they don't pay me anything to say that. So, okay, let me see what else we got here. All right, I purchased your book. And I currently, thanks, oh, cool. So thanks, Delbo. I've been seeing, people have been mentioning about my ebook. And yeah, I just want to mention something about that. that ebook, I wrote that a little while ago. And the thing is, the concepts are still good, right? And the whole purpose of that ebook was to basically put a document together that highlighted the most effective techniques that offer the most valuable information from a chart. Okay, if you notice, I don't talk about oscillators in my ebook. So that information I found, for all the years of doing this, I found to be the most reliable information. Now, that ebook was to introduce you to these different concepts, which again, you can Google Elliott wave, you can Google trend lines, right? All those things are in the ebook, but the goal is to also pursue education in these individual topics further, right? I talk about candlesticks in the ebook, but if you notice, I don't talk about 50 candlestick patterns, right? I only talk about 2, because it's really all you need. Anyway, but like I said, you can find all kinds of information about this. What makes the ebook slightly unique is that it's a combination. It's the combination of these techniques, not the techniques alone. Like you could sit there and research candlesticks forever, and like I said, you can have a whole book of 50 candlestick patterns, but most of them aren't going to do you any good, especially if you have no context for them. Okay. So anyway, thanks for asking, and thank you for buying the ebook. I appreciate that. Okay, let me see what else we have here. All right, so hi. All right, let's talk about SPCE. Let's talk about it. So, oh, look at this, right? So this one's getting some hype too. This one obviously is a very news-driven type of stock. So you bought some at 24. You said 24.50. All right, nice. They had some news recently or whatever, and everyone's happy. Blah blah blah. You have this gap over here. All right, from earlier in the week. This is cool. Hold on a second. All right, so this thing is going to close at $31. You're nearing a resistance. Right now, there's no reason to sell. There's no sell signal, right? So you're in from a great price. What you can do, and I always tell people in these situations, take something off the table, right? Hopefully you locked in some profit, whether it's 10 shares, whether it's 15% of your position, just lock in some profit while the candle is vertical. These are the herd taking risk off your hands. Give it to them, right? People get the greed steps in, and but what if this is not the top? What if it's going to go even higher? You can't play that game, right? That's how you give it back. So it doesn't matter if it goes higher. Take something off the table. That's all I'm saying, but not all of it. Now, in a situation like this, when you have a nice winner, because it's very nice, a good thing to do is let the market work. How much higher does it want to go? We don't know. So put in a trailing stop, right? Manual. So you can use this time frame, but you're going to give back a lot if it turns. So if you use this time frame and you're looking 2 candles behind the current high, this is the current high. So this candle is going to be closed here in a few minutes. So we go back one more candle. What is that low? 25.68. So your stop goes at like 25.5, right? So if it turns back, yeah, you're going to give back a decent portion, but you're giving it the chance to work, right? So if this thing turns around tomorrow and knocks you out there, you're like, oh, I could have had the top, but I didn't have the top, right? It's a trade-off. You have to decide what's more appropriate for you. You're never going to get the top and have a trailing stop at the same time. It's just not possible. It's either one or the other. Now, another thing you may want to consider is a smaller time frame, right? A 240 or 4-hour chart. And again, I don't talk about smaller time frames usually, but when it comes to a trailing stop, at least you have some more structure to work with here. So if you want to go 2 candles back here, that's basically a 4-hour chart is basically it's a daily chart, but each day is 2 candles, right? Basically for a stock. So 26.61 would be your low, right? So you can capture a little bit more if it stops you out there, but chances, there's a better chance it can pull back there, obviously, than the larger low. So you have to decide if you want to use that technique, and that's the purpose of that is to see if the market wants to continue to run, or you could just wait till a sell signal develops, and there's nothing there right now. A sell signal would be like a bearish pin bar, an inside bar, a red inside bar, and then you take out the low, or this candle, the current candle, 28.97, that low is taken out. That can also be considered a sell signal. All right, so that's how you want to manage. When you have a winner, again, a lot of times you want to try to let that thing run, okay, especially when you're on this time frame. So thanks for asking about that. Now, as far as targets go, well, let me see. right? The first thing I would look at are resistance levels. You're basically at one right now, all right? As far as targets, you're at this area here, which is what, $30? So that would be one place to get out, you know, to lock in some. You have another resistance up in here, which is what, 33.5, around that area. That's another area. Then you have this gap area up in here, so it's around 40. Those would be good places to put limit orders if you want to try to let, you know, see if it could run that far as well. I like using limit orders because there's a better chance you get nearer the top with a limit order. Although, hey, you know, a lot of times we leave a lot of money on the table because it just goes dramatically further. But hey, if as long as I'm beating my risk, that's all I care about. I don't care if the thing runs 1,000 points without me. If I've risked one and I made two, I've done my job, right? And that's all you can do. That's all you can ask of the market. Okay, so thanks for asking. All right, I'm an hour into this, so I'll go a little bit more. I have some good questions here. Manhav, one quick one. Do you just look at candlesticks or look at any? Okay, no, I don't look for this time frame. I don't look at all that stuff is nonsense. I mean, I shouldn't say nonsense, but it doesn't give you any valuable information when it comes to anticipating prices. So I'm not looking at just candlesticks here. That's all you see on my chart. Okay, but I'm looking at more than just candlesticks. I'm looking at levels. I'm looking at price structures, all right? But, you know, there's no little graph on the bottom of my chart that says that. So that's what I'm looking at. It's all price action based. Oscillators and all that other stuff are backward looking. They rely on some period of time where price is being smoothed. They have their purpose on smaller time frames, but I don't use, for this time frame, it's unnecessary, right? It's not like there's a ridiculous amount of noise here. All right, so that's why I don't waste my time with any of that stuff. I know a lot of gurus out there, I have my RSI, and I have my this and that, and I have my chalk in this, and I have my... Okay, that's nice. A lot of them do it because they're appealing to the human nature thing that more is better or complexity is more attractive. But when it comes to timing a market, less is more. I can't say that enough times. The least amount of information that you could use to make a decision, the better. More is not good because most of the information that we consume, especially in this space, is information of no value. There's no value, especially if everyone else knows it. All right, the best information you can get is inside information, which is illegal in the stock market. But in the Bitcoin world, sure, it's legal because there's no oversight. But unless you have that, you know, then you want to use as little information as possible. All right, so good question. XX, I'm confused about the amount you risk. For example, when you buy a signal period on Bitcoin, you said we risk 8,000 points. This is not in your book. I don't really understand it. Okay, so back to the Bitcoin chart here. So I'm looking at market structure for risk. And so here's the thing. It's the size of the candle, right? But it's not just the size of the candle. The question is the low. I'm looking at the level. The level, as defined by the market, is 30K. So that means when the buy signal shows up, okay, I ask, where's the risk? Now, I can look at this inside bar and say, well, I could use the inside bar low at 36.4. I could use that. But this inside bar appeared near the higher part of the range, okay? The range is defined by this large green candle and the candle before it. That's pretty wide. I'd prefer the inside bar show up nearer the main support. The inside bar is not support. Okay, the low of that inside bar just helps me define risk, but I don't like where I have to buy it from. The chances of that low getting taken out based on the location here are very high. So that's why I say the risk is 8,000 points, because if I buy it at 38,000 or 39,000, it can easily go to 30,000. And the other problem with that whole thing is, look, so the market says 8,000 is the risk. Okay, fine. The next question I have to ask is how likely is it that I can make 8,000 points, you know, relatively easily? Like, will the market, can I justify that risk relatively easily? How hard does the market have to work? Well, that means I'm looking at like what, 40, 46, 47, 48K, which is in this area here. It's possible, but I'm fighting bearish momentum, right? Again, context. This is not like the bull market we had a few months ago, right? We're in a consolidation, so I have to adjust expectations. 8,000 points is way too high to risk in such an environment, right? So you have to understand your wave fours. And wave fours, again, they're full of false starts, they're full of false breakouts, which means my expectations are low. I don't expect to get to 47,000 easily. It can happen, but I make my expectations low. If I'm wrong, I'll let the market prove me wrong, and then I will readjust. That's the best I can do. So thanks for asking about that. Okay, I've been listening to you for a month, and I learned some. Oh, cool! I appreciate that. Well, thanks. I get a lot of nice compliments. I'm glad everyone is learning. I mean, that's the whole idea. My goal for these things is just to really inform you to reality. There's a lot of, one thing you'll learn in this business is there's a lot of hype. If you haven't learned that yet, there's a lot of hype no matter where you look. They appeal to human nature. All right, marketers know this. They've known this for a long time. There's a lot of people out there that pose as authorities, and maybe they know some more terminology than you do. Maybe they've been at it a year or two and they consider themselves experts, but all they're trying to do is push something on you, right? Usually some kind of membership, some kind of whatever. And yeah, you know, we have a membership thing too, but I'm not pushing it every 2 seconds, right? For one. And for two, you know, if you like our style, great. If you don't like our style, hey, you know, it's not for everyone, right? I don't want action-oriented, crazy people joining what we do anyway. You know, so, but my point is, look, I was in your shoes at one time. I was misled for many years on a lot of stuff that, you know, if someone had just told me this is how this works, then, you know, I would have saved myself a lot of money and frustration. So I'm glad to at least inform people as to the reality, you know, of how markets work, and to at least steer your attention in the right direction. You know, I can't take risks for you. I can't do all those things, but at least if I let you know what reality is, perhaps you can make better decisions on your own. And overall, after everything is said and done, this game is about confidence. That's really what it's about. And in order to have confidence to make decisions on your own, you cannot do that listening to people. You need to be able to pull the information out of the market yourself and say, oh, this means this means that, here's my risk, I'm willing to take it or I'm not willing to take it. And that's it. And then you go, okay? That's how you have to think. If you're sitting there, well, this guy said this and then this guy said that, and you can't win that way. You can never win, because you're gonna, when things go the wrong way, but this guy told me this, you're gonna get emotional and you're going to act like the rest of the herd. Right? And the herd mentality. And that's why markets work the way they do. It's the herd driving price. And when you learn to think outside of the herd, which is very hard to do because everything around us is made for us to think like everyone else. You have to unplug yourself from that. Again, it took me a very long time to do that. But that's what you have to do. That's a very contrarian point of view. People call me negative. People say I'm pessimistic. I'm blah, 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 because I don't go with the herd. All right, and I don't care what anyone says. I got people all the time telling me, well, this expert said this, and that expert said that, and he's on Bloomberg, and he's on this, and I don't care. I don't care, because they can be wrong. I could be wrong too, but you know what? The information that I see, I know the risk I'm taking, and I'm willing to do that way. If I'm wrong, the market will let me know that I'm wrong, and that's the only thing I listen to is the market. I don't listen to people at all. I don't care who it is. Okay, if a top trader called me personally and said, hey, this, that, then maybe there's a better chance I would listen. Okay, but if it's some public nonsense that everyone else has access to, then it's all the same. No one knows anything. That's how you have to look at it. All right, enough of that rant. People are, oh, he's so negative. He's so negative. I'm not negative. I'm realistic. And you should be too when it comes to markets. That's why when everyone gets all optimistic and crazy and Bitcoin, and go back. I want you to do an exercise. Go back. Watch videos from back in February, okay? Watch all the nonsense on YouTube going back to February. All the hype, all the optimism, all the nonsense. It was in the stock market. It was in the altcoins. It was everywhere. No one saw 30K coming, okay? And everyone got long, and no one saw 30K coming. So much for optimism. All right, okay, cool. So let me see what else we have here. Now the previous candle's about 5K. Should I consider this range as risk? Well, no, you can't. Because the level has not changed. 30K is still the level, right? You can't focus just on a couple of candles. It's the context. You have to consider the levels and the candles, right? So the candles are smaller, but the level is still 30K. So that risk hasn't changed. I have no interest in this thing at all, especially since this may be a lower high, okay, in this context of a potentially, bearish momentum structure here, right? On top of that, we're in a wave 4. But since we broke 40K, I always go back to wave 4, because wave 4, let me show you real quick. How long have I been talking? Okay, a few more minutes and I'm going to wrap this up. I just like to talk. I like to talk and I can't stop. Okay, so here, let me show you, right? We look at gold. Look, oh, gold looks nice. Well, let me show you what gold looked like before it looked nice. Many of you that have been following me, I go over this chart all the time. So this is gold. Look at gold back in August. This was gold here back in August, okay? You better believe when gold was up in here, what were all the experts saying? Gold will be at 5,000 by tomorrow, right? That was at 2,000. Gold will be at 5,000 before you know it. You better buy some gold. Yeah, over the next 8 months, gold went to 1675. Why didn't anyone call for that? Anyway, my point is, look at all the gyrations from that high to the March low. Okay, we got long here off the double bottom, right? That's where we got long. You could see the trade information right there. Now, all those gyrations in between, that's a wave 4. Wave 4 of what, you say? Well, what's a wave 4? Well, if you look at the bigger picture on gold, okay, wave 4 is just a pullback of a broader bullish trend. Gold is not bearish. It's never been bearish. It hasn't been bearish in a long time. But you better believe people were calling gold is bearish. When gold was pulling back to 1675, gold is obsolete. Gold, who trades gold? I mean, Bitcoin is the new thing. Screw gold. Yeah, well, gold is here now. So anyway, my point is that's a wave 4, and that's what I'm anticipating for Bitcoin. So because my expectations are adjusted, and because I'm expecting all this type of gyration, type of price action, I have very little optimism when I see buy signals trying to develop off of a potential lower high on something like Bitcoin. And this goes for the entire space. So all these magical altcoins, oh, but Link is my hero. Yeah, right. Okay. All these magical altcoins that, think they're going to try to get away from Bitcoin, until they actually do, I don't trust them. Again, I could be wrong, but like for something like Link, perhaps it delivers a higher low somewhere along the line, or something like MKR, okay, which have been relatively strong. Perhaps they deliver a higher low, and perhaps they give us a better quality buying opportunity than Bitcoin, right? Same with Matic, that's another one, okay, like we talked about. Nice, this is relative strength, okay, that's cool, but I want to see a better price, and I want to be able to define my risk clearly. At this point, this is not a good price, and my risk is very high, right? So that's why I'm not interested. I don't care how amazing it looks. We all know we're amazing, how we're amazing things. When we see an amazing chart, we know where they're going next. Okay, we just don't know when. So anyway, can you tell which confirmation signs? Okay, hold on, let me just go back here. All right, I got to wrap this up here in just a couple of minutes, but let me just see, I have some more questions. How do you set your targets? Well, yeah, previous support and resistance is one way. Whole numbers and also projections, right? It just depends on the situation, and it also depends on the instrument. All right, so good question there. Thela, following you on TV, 2018, another long-time follower, thank you. Turn my red portfolio into green, okay, and adding more inventory, okay, and sold all, oh, nice. Well, I hope you learned something from us. I mean, that's what we were doing in 2018, right? Everyone was criticizing us. I mean, you had these trolls on TradingViews. Oh, if you follow these guys, you're never going to make any money. They were buying it at 13,000, and they were buying it at 10,000. Right, well, now you know what we were doing. Anyway, nice job. Our portfolio was red too, by the way, in 2018, and we turned it green. It wasn't hard to do with Bitcoin. We just did that really with Bitcoin. We got rid of all the garbage altcoins, most of them, and we just put that money into Bitcoin. I mean, you can go back, ask Andrew about it. It was all him. That was all him, basically. I don't really do much of the long-term stuff. So he's more long-term oriented than me. So thanks for asking. Will you tell us which confirmation signs? Well, I mean, confirmation signs are relative to candlesticks. So I'm looking for buy or sell signals from the candlesticks. But the candlesticks alone don't give me enough information. All right, it's the context. So if I'm in a bullish trend and I see a buy signal, I'm more likely to give that more weight than a sell signal in a bullish trend, which we see that all the time. All right, so it's about knowing where to weight the probabilities, all right, based on the trend and the structures. I can't get into all that now. Now, you have been giving. Oh, I appreciate that. Thanks. I work hard to try to inform people. I do work hard, and I'm glad people can recognize that. I can for sure say that I am now able to manage my risk better. Cool, cool. I appreciate that. See, that's nice. Thank you, thank you. All right. So yeah, so I'm gonna wrap this up now. It's actually early today. I'm usually at this almost 2 hours because I can't stop talking. But when I'm simulcasting on TradingView, I usually have like a billion questions, and it's usually I can't answer them all. So hey everyone, I really appreciate your questions. I hope I answered them to your satisfaction. If not, you can check out Greenbridge Investing, whatever. We do have a free chat room there. I just have to say something real quick. In this period here, and I'm going to put Bitcoin back up. In this period, right? We've had a lot of new signups, a lot of new members joining us, and I know there are a lot of them. When they come to us, they've been basically brainwashed, looking for action, because that's just the way things have been. So they come to us looking for action. But we're the opposite of all that, right? So one thing that we teach is patience. And patience is actually where a lot of money is made. It's hard to understand. More is not better in this game, okay? We've made a lot of money by sitting out and staying away from would-be bad trades, right? It's hard to show that type of result. People just want action. So staying out of a trade is also, known as being flat. Flat is a position. So what I'm saying is if you come to our chat room right now and you do the free trial and you're like, man, these guys don't call any trades. Well, that's what's going on. If the market environment doesn't provide the right criteria, because again, we're following, my swing trades are based on a very specific set of rules. If the market does not want to align with my rules, then I don't take risk. And I'm even more conservative when it comes to sharing ideas with our members, because I know we have a lot of newer people, and I don't want them to get caught up in these high risk, any type of higher risk or crazier instruments. Now we have some experienced people like Anna, and they know what they're doing, and they can get in and out of stuff because they're quick enough. They don't go into hope mode. But someone who's brand new, who's only been at this a couple of months, they don't know. So they get into something, they don't put the stop and all this and all that, and then they lose a whole bunch of money, and they're like, well, I'm not sure if it was me or if it was you, or it's like, where'd you put the stop? We put stops in there for a reason. So I have to be even more mindful of newer people. So my point is, I keep things very conservative. So you won't see a lot of trades right now because the market, they're just not there. So, one, I like the SQQQ. I like that long, which is a short on the NASDAQ. I like that idea. It's aggressive. That's why I haven't sent it out. And, perhaps we'll get some trades in something like Link. Maybe Bitcoin will develop into something over the next few days. But again, it takes days for some of these things to develop. All right, just that gold trade that I showed you, that gold trade, I sent that out on March 30th, okay? March 30th. The third target wasn't reached till like a week ago, okay, which was May. So it just goes to show how much time these things take. And it took a while for that signal to come together, right? It took, we were waiting on that thing a couple of weeks before it finally lined up. Okay, gold, going in with gold, but it took forever, right? So people have to understand. Now, people get caught up with the smaller time frames, and they're sitting there, well, but my 5 minute says this, and my third, we're swing trading. So small time frames you have no business looking at small time frames if you're trying to trade the bigger picture. Small time frames are not appropriate. Most of the price action relative to the bigger picture is nothing but noise. You say, well, then why do people look at them? Well, they're using different strategies, okay? So you have to make sure you don't mix, right? So that's another thing. So I'm just saying, if you come to our chat room and all that stuff and you see it's kind of quiet, that's what's going on. We put out analysis, we put out perspective, but we may not put out a lot of trades until the environment improves. All right, so that's my rant on that. All right, so again, I want to thank everyone. I'm trying to learn the rules for swing trades. Do you have a tutorial about this? No, I don't have tutorial. I don't have a specific tutorial. I mean, we go over it like in our chat room. I mean, I follow rules. I say I have rules, but I mean they're very simple. Like, we have to have a long signal and a bullish trend. I mean, that's a rule, right? I take it for granted, but I guess, for people, that's a specific thing. And then the candlestick stuff has to line up, right? So it really has to do more with that. I can't really get into all those details right now, but I can say this. People that have been in our chat room for 2 years, some of our members have been with us since the beginning. they've learned all that stuff because they've just seen us do it in action. They've seen the inventory stuff. They've seen the swing trades that we do because they get them by text, and they've learned that way, right? Without me having to sit there and explain it to them. So you might want to consider that. But I'm glad to see that people have learned, all that stuff, and they're much better traders and investors. All right, let me see. Hope and greed are the two reasons why people. Yes, that's true. Hope is. It's funny you mentioned hope, but that hope is basically one of the worst things for you in the market. Hope, the casinos use it to lure you in. So when you start playing that slot machine, you hope you get your money back. It's an emotion that, really can cost you a lot of money. You must separate yourself from those things. Rules help you do that. All right. That's why I always tell people you have to try to minimize yourself from the equation as much as possible. Another thing about rules is a lot of times they're very personal. And there's no such thing as a one-size-fits-all thing for rules. We have some general rules, but how you manage risk specifically is going to be something specific to you and your financial situation, right? Someone with $50,000 in their account can trade differently than someone with $1,000 in their account. You cannot trade the same way because of the amount of risk percentage-wise, okay? So anyway, I need to recognize the signals more. How can I get into your chat room? Well, so if you just follow the link, if you just click on the show more on the bottom of this video, I have links to all the stuff there. You could just go to, we have our Greenbridge, it's a paid service, it's a signal room. But like I just finished saying, we don't have a lot of signals right now. So you have to hang around for a little while. We have, the memberships, it's like 6-month and yearly, that kind of stuff. We don't have like a monthly thing. So that's one way to do it. We have a free chat room. You can ask questions in there, but a lot of times, we're very, Andrew's got a lot of stuff going on. I got a lot of stuff going on. So it's hard for us to answer all those questions all the time, but we do our best. So anyway, that you can find more information there. Anyway, I got to wrap this up. I really appreciate everyone's great questions. Thank you so much for spending some time with me here today. If you can, please press the like button. I guess that helps me YouTube wise. That's always helpful. And other than that, enjoy the rest of your day or the rest of the evening, wherever you are in the world, and catch me next week. I usually simulcast on Mondays, on TradingView and on here. Okay. So again, I'll leave you with that. Thank you so much for watching.